Welcome to More Than Legal, the show where we go behind the scenes to uncover the fine print of power, purpose, and profit. I'm your host, attorney Danielle Laughlin. After almost 2 decades in the trenches of courtrooms and boardrooms, I have learned that every move leaves a mark and every deal tells a story. What will we uncover today? Let's find out. Hey, real quick, before we dive into the episode, remember, nothing you hear on this podcast is intended to be legal, financial, or tax advice. I invite you to contact any of the guests you hear by looking in the show notes for their contact information, or if you'd like to reach out to me, you can find my contact information at daniellelaughlin.com. All right, now let's get into it. Hey, welcome to More Than Legal. I'm your host, Danielle Laughlin, and today we are having an exciting conversation about math. We are going to talk about math in an exciting way, and you are going to be so blown away by our speaker and our guest today. This is Greg Crabtree. I became aware of him a few years ago through the Entrepreneurs Organization, where he was teaching us about Cash Day, which is one of the learning days that the Accelerator program does every year. Greg is a phenomenal just simplifier is really the best way I could put it. And I'm going to let him introduce himself more. But another thing to know about Greg before we dive into the conversation is that he's also a published author and has 2 incredible books where you can go deeper into some of what he does and how he helps entrepreneurs really understand their financials and how to build wealth and a business in a much simpler way that allows you to kind of get out of the weeds and focus on what matters most, which is really that long-term legacy. So I'm excited for this conversation. Greg, thanks so much for coming today.
Yeah, I appreciate it. Thanks for having me, and happy to join your audience.
Absolutely. We are really pumped. I'd love for you to just tell the audience in your own words who you are and why you do what you do.
A chicken farmer from Northeast Alabama that went to school to do accounting because they worked in an air-conditioned office. So that was about the extent of my choosing of the profession. Come to find out, I'm probably not the typical personality profile to be an accountant, but I endured, learned the tools, but really developed a love of working with entrepreneurs to use data in a more effective way. Now, I graduated college in '78, and so I come from a background of I touched my first generation PC in 1983. And once I got hold of the spreadsheet, it's like, oh my goodness, where has this been all my life? And so I was an early adopter of technology, and it has just kind of grown with all the tools. I was an early implementer of QuickBooks with our clients. Literally, the first version of QuickBooks we used was the 1.0 version that was DOS, you didn't even have the GUI interface. And so, but over time, first there's the gathering of data, but then is what I learned in my tenure. I joined EO in 2001, and really that kind of gave me an entrepreneurial direct focus, shifted my practice from being focused on traditional, tax and financial statement production to how do I help an entrepreneur run a better business? Because that's really what my EO forum told me. I always go back to this. My first EO forum, I asked them, because in EO, I can't do business with my forum mates because there's a no solicitation rule. And I said, well, what is it? How many of you would recommend your current accountant? And the answer was 0.
Right.
Now, on a net promoter score basis, that's a pretty bad score. That's called you suck as a profession. And I said, okay, well, we do something necessary. Obviously, everybody's got to file tax returns. There's times you need financial statements for financing and those things. And they basically told me 3 things. Number 1, we don't like the tax day surprise. And I said, okay, well, there's a way to fix that. And you may have to pay a little more to get guidance, but there's a way to not have a tax day surprise. I said, what else? I said, we don't like being billed by the hour. And this was a huge thing because one of my clients who became a really good friend, we would have these discussions about business, and he would always tell me, he says, the problem with you accountants is I ask you how much something's going to cost. And he says, well, it depends on how much time it has. And he says, time is not a unit of value. It's a unit of cost. And so we learned how to build all of our consulting projects today are fixed price. And so we work to value, and it's on us to be efficient and effective. And just remember, if you do bill by the hour, which this being a legal podcast, a lot of lawyers bill by the hour. If you bill by the hour, there's only two possible outcomes. I gave away my expertise, or I charged for my ignorance.
Absolutely.
And I do get it that some states, unfortunately, do not allow attorneys to do anything but bill by the hour. So I'll give you some latitude there. But the law firms that we consult with to help them run a better law firm business structurally, we try to teach them to work on a fixed price basis. But the third one was really what changed my career. Was they said, oh, by the way, you see hundreds of businesses' most intimate details. You ought to have some idea what works and what doesn't. Now, understand that's not what they taught us in school. They taught us a set of rules. The firms don't even look at it that way, but that's what the customer wants. And so I had to do something that's an anathema to an accountant. I had to start studying data that I had access to because we have client data. I started studying data with nobody paying me to do it. Now that's not in the DNA of an hourly profession.
Right.
But it's paid off brilliantly, because it led to the production of both of the books that are research based, of saying I didn't go to the data with a proof text of what I thought. I just went to the data that says, speak, tell me what you're saying. And, I mean, everything kind of just fell into place. The structure that we created for simple numbers, we look at data the exact same way for every business, regardless of industry. And every industry wants to say, oh, we're different. No, you're not.
Right.
No, you're not. 100% of the businesses globally leverage labor to produce margin. We don't leverage labor to produce revenue. We leverage labor to produce margin. If I do not have margin, revenue minus any pass-through cost. If you're a pure services business, I don't have COGS.
Right.
But I've got to produce margin off of that labor. And that's a universal principle that we don't teach in business. And then, fortunately for me, in EO, I get to chair an executive ed program at Wharton Business School. And I've learned from two of our incredible professors, David Wessels, Gad Allen. The first year I was running that program, I'm sitting in the class just like everybody else. And David, basically starts covering this concept of return on invested capital. Sounds complex as a term. It's actually fairly simple. What money did I put into the business? What is the profit I'm getting out of it? The business is an investment. And what I realized at that point was there were no benchmarks effectively for return on invested capital in the private business realm. And so once again, I went back to the data, started studying it. And we've established now benchmarks of return on investment. So realistically, yes, businesses need profit. Yes, businesses need cash flow. But at the end of the day, what makes a good business is a good return on investment. And I will tell you, for any entrepreneur listening to this podcast, the best, highest value investment you will ever make is the business you own if you run it correctly. It will just totally outstrip, even without selling it, it will outstrip anything you can do in the market. And then, oh, by the way, if you run a really profitable business, it's kind of worth a lot if you ever wanted to sell it. And so you get the best of both worlds. I'm a profitable cash flow, good return on investment business if I run it and own it. And I'm a good business. I'm a great investment if I ever want to monetize it and sell it. And I kind of like having multiple options. I mean, it's a really good thing.
It is a good thing. It's a great thing. And it's building, instead of stripping all the cash out of that company and doing a bunch of, really, albeit creative things with how you can, manipulate the tax code, or, we hear all kinds of things, and look, we're all for the diversification, right? You got some cash. Maybe you want to buy some real estate. Maybe you want to invest, overseas or what have you. That's okay. But what I really love about your philosophy is focus on what you have right in front of you. Instead of stripping all of the cash out of it, using that profitability to fuel what will be a greater return over the long term than any of those
Oh,
other
absolutely.
ever.
Yeah, and when we do return on invested capital, we count into the fact, one of the common errors of the law firms we work with is they strip all the cash out at the end of the year and distribute it out to the partners. Well, all you're doing there is you're destroying the enterprise value of the business, and you're running it as what. So there's two economic models in the law of business. You're either professional sharing overhead, or you're creating a business enterprise.
Correct.
I gravitate to I want you to create a business enterprise. If you want to sell it someday and have business enterprise value, you got to run it like a business. And to run it like a business, the first thing we try to get them, well, the two primary things we try to get a law firm to do is, one, hit your profit target first. And this is an important piece, pay yourself a market wage for the job you are doing in the practice. So wide range of types of law activity, whether you're personal injury, general corporate law, family law, divorce attorney, whatever, but at the end of the day, there's a market value for the thing that you do. And then don't confuse your share of profits in your compensation. I own a piece of the firm because I own somehow, some way I got equity,
right,
in that process. And so I deserve a share of profitability that I've got to pay tax on, but it also creates, a dividend. But I must keep the cow healthy. The cow's the business. You can keep your cow healthy and milk it every day, or you can starve it and get one barbecue dinner.
it's true.
Yeah, so it's one of those that you kind of want to, and law firms traditionally strip all the cash out, live on the line of credit till about April or May, and then build up to that next cash. And it's like, listen, all you got to do is one cycle. You got to go through this, leave your 2 months of cash in the business that we prescribe, 2 months of operating expenses, and act as if that's zero cash. And what that gives you is a lot more stickiness, because I guarantee you there's a high percentage of firms that blow up after that end of the year distribution. And now the firm is basically in a negative equity position because of using debt to then, get back to that positive. And that's a critical blow up point, for firms, all across the landscape unnecessarily. And
I
if you
love
just establish that discipline, but the other one is the compensation piece, is clear communication of, you get paid a salary for what you do, you get a return on what you own.
right.
Now I'll share this with the audience. So in my industry, the accounting firm, I'm now merged my practice with a national firm, Cartwright and Ingram, back in 2020. And our firm has participated in the current trend of taking on private equity investment. And so we did a private equity transaction last November. But the thing that had kept, so the famous one in the papers was Ernst & Young had looked at this 2-3 years ago, and it blew up because of this one thing. The partners were going to have to take a cut in pay because they didn't want to take a lower distribution. Well, their distribution was part salary and part profit.
Right.
Well, if you take on an investment, well, that profit has to go to the investor, not to you.
Right.
And because they had violated that principle, they lost access basically to that private equity. Fortunately, the way our firm had worked leading up to this investment, they were doing it more under the principles that I ascribe to, and it allowed us to to be able to do that and effectively do a great deal in the marketplace. And so it is really one of those that there's a lot more opportunities open up to you when you stick to fundamentally sound disciplines of how things work. And then it's a matter of, once you establish those frameworks of the profit target where there's no distortion in compensation, I know what the cash target is that I have. Now I can look internal to the business and look at individual productivity across lines of business. And so maybe I've got a personal injury section. Well, personal injury has a lot of volatility. It's big years and low years. And, but also I get consistent income from turning files too. And which ones do I litigate? Which ones do I keep? Corporate law is a little more consistent. Family
Right.
law is a little more consistent. And so you got to look at each of those has a pattern of what you look for. But at the end of the day, I got to get productivity. I've got to get output. And the nice thing about our industry, legal industry, I can measure productivity by every billable resource to a much more finite way than 90% of the rest of the businesses.
Well, and I'd love to go deeper on that topic in particular, because one of the eye-opening things that I learned from you is about that labor efficiency, because I had already been, there's like these standards, there's these things that just every industry has. Every industry has these ideas about what is supposed to be. And in legal, I had always heard it's a 3x return on every dollar of labor. And then your calculation is a little different, and it's lower actually. And one of the big things in law, as you probably know, is this burnout, overwork, this, like you said, the billable hour. We try so hard, Greg, you wouldn't believe how often I'm trying to get clients to engage us on a subscription monthly plan or on a project-based value of this group of services. And they don't want that. They'd rather pay by the hour because that's the thing that they know about.
That's what they're comfortable with. Yeah.
That's what they're comfortable with.
I think over time though, I mean, and we had people that, here's the thing. We switched over to the fixed price process for consulting in 2009. So that was when we switched.
Wow. That was quite a while ago.
No client that was working with us at that moment ever bought our fixed price services from that point forward, because they knew us in a different way.
Yes.
So if you go fixed price, it is only going to be to the next person you talk to. You will not probably be able to get your existing people that know you very, very small potential of adoption, unless you just say, this is the only way we work. And, and you probably in the legal process, they would probably accept it. I think more so than even in accounting, but at the end of the day, it is about your prospectively, you're going to make that change.
Right.
But here's the thing about fixed price. Fixed price has the greatest potential of profitability and the greatest potential of not profitability.
Right.
Because there's two things required to bill on the fixed price basis. Number one, did I scope it correctly? And did I define the scope? And if I get out of scope, I got to raise my hand very quickly and say, time out. We got to re-talk about this because you're asking me to do something that was not originally planned in the agreement. Second requirement is I must manage to the scope. I've got to go execute effectively. Now, because we were doing our own creative consulting process, we just got a little better. And the thing is, as we got more efficient, I didn't lower the price. In reality, we increased the price, because the price is the market value of the outcome.
Yes.
It is market. If I bill by the hour, I never get the benefit for being the best executor.
It's true.
Yeah.
It's absolutely true. And it's also this idea of working against the client interest, because if you're going to pay us by the hour, there's no incentive for us to do it any faster or figure out how to innovate or, be more efficient with our templates or think through the workflow, right? Like, and so to me, it's also better for the client when you can do it that way. And there's transparency also, because now you can budget.
Right.
So now you can actually budget, because just like with accounting and the hourly rates, why do people not like that? Well, because I don't know how long it's going to take you. And if the firm has never been forced to actually look at the efficiency of that service as a product, right? Like as an actual value to the customer, the client, then they can't anticipate, like for example, with litigation, it's like some aspects of litigation are pretty predictable. Other aspects, maybe not, but can't. And this is one of the things we're working on too, is sometimes you might have a service offering where one aspect of it is a fixed fee and another aspect of it is maybe an hourly. Maybe you can set some caps and try to work work to a cap and see where you are. In litigation, that's something we've thought about too. I love that this ties back to EO because I just think it's such a wonderful organization. There is an anti-solicitation agreement amongst mates, which I think it also contributes to transparency. I recently presented to my own group a similar question. Look, I'm trying to sell these services in this way, and it's very difficult to sell it this way. Why is that? And they do.
Yeah, and because you can't sell to them, you actually get an honest answer.
You do. And I think that one of the things that became very apparent to me was exactly what you mentioned a few minutes ago, which is it's such a mystified process, right? Like legal, it's like, okay, well, legal could be a whole lot of things, but there's really what we've found to be like 5 core, aspects of legal in a business. When you had that conversation with your forum mates, what was your, as an entrepreneur yourself, right? Like, what was your next step? You say, okay, I got this feedback. It's honest. Now I'm an entrepreneur. I'm seeing my problem in a new way.
Right.
What next? What did you do then?
So, the first thing came to, probably start doing more testing the fixed price concept. So we had services that people were buying at the time, so we tested that process and got more comfortable with it. But the data analysis part of it, of studying data to figure out what we believe, because we're not taught to believe things in school, we're taught to process rules. Well, I wanted to develop a set of business beliefs, and that really is what Simple Numbers kind of became, the ultimate work of studying entrepreneurs that really didn't have any financial acumen, but were great entrepreneurs that built successful businesses. And it's like, I wanted to learn from them, not them learn from me. Right. What are you looking at? What are you thinking? And oh, by the way, when all else fails, you can serve as the bad example. I wanted to look at the businesses that failed, and why did you fail? What was the red light you went through? What was the thing that you didn't see that you should have seen, that could have been seen? And probably in every business failure that we've seen, I mean, these are the obvious pivot points of where somebody ran through a stop sign and didn't, and should have changed decisions, and they didn't. There are certain industries, obviously, over time that disappear. I mean, there's not as many buggy whip manufacturers today, because we don't have horses and carriages, instead of cars. But there's still some, and so, but very few industries disappear, but they do change and they do morph. And did you adapt with that change? Of late, I would say the biggest work that we've had probably in the last 5 years, because of COVID and significant inflationary principles.
Oh, yeah.
Is really just us pushing clients to understand pricing dynamics. And we do a lot of work in, helping them understand where does the market give you price advantage, and where do you have to look at more commoditization. And anytime that you move towards commoditization, not to say that's good business at times, but you got to decide, is that what I want to do?
Right.
And so I always talk about it in terms of what we call the price elasticity curve. So just kind of picture a graph where Nordstrom is the highest price with the least amount of customers, and Walmart is the lowest price with the greatest amount of customers.
Yes.
Well, that's kind of a sloping curve from one to the other. I don't want to be Walmart, and I don't want to be Nordstrom.
Correct.
I want to live in the elbow of that curve. I think that's really where most entrepreneurs find comfort. There's enough work at a high enough price, but I've got to establish the boundaries of, we get above this is out of our league. We get below this is work we don't want to do.
I love this.
Yeah.
This is so critical. It's like I'm talking with you and like reliving some of the, less scientific revelations that we had, because
you absolutely, you felt it.
Yeah.
But you didn't have a context to put it into structure to say, this is the dividing line. Says no. This is a
Exactly.
no. But here, this is our sweet spot. This is where we want to live. And I do think, and you know this from experience, it's more about what you say no to than what you say yes to.
Yes. We even what we did, we created like a, downloadable document,
Mm.
subsidiary company. Hey, we get the call. Oh, we just need this. I just need this document. I just need this. If that's just what you need, great. You can go over there and you can get that thing. But
Mhm.
what we found is that it was really going nowhere because they didn't need just that document. They also needed the legal advice and counsel that goes along with it, right? And so I feel like there is a lot of pressure on entrepreneurs to, there's a race to the bottom mentality in a lot of industries, and especially with AI, right? Like that's been a huge game changer for so many industries, including software development.
Mhm.
I
Oh, yeah.
we serve the software industry, and we're even seeing like AI is actually disrupting its own industry in a very profound way. So
Well,
there's this idea.
the interesting thing about AI is this, and so it was the EO at Oxford program I did a couple of weeks ago in Oxford University in England through EO. I mean, we had a lot of discussion with AI. A lot of the attendees were applying it, and then I get home and go to I run a mastermind group, for a group of physical therapy practices, and I got to experience a demonstration of the first successful interaction with AI in a practical sense. So this was an AI agent that answered phones for a physical therapy practice that was doing regenerative therapy. So not just basic PT, they're doing like stem cell
And so,
therapy,
right.
hyperbaric oxygen chamber, those kinds of things. And
Which
I'm
is like
telling you,
kind of luxury, right? Like, I mean, I would consider that to be like a luxury offering.
yeah, these are actually very affordable, services. But people have a lot of questions, and the person testing it, was one of the PTs in the group, and he was asking it questions, and he would interrupt it, and it would accept the interruption and readjust. This thing handled that call better than any human I know,
Wow.
and it would reset, reframe, call to action. And now here's the point I want to make though. This is the democratization that comes with AI.
Yes.
That agent was developed by one person on the company that runs the group. That they provide marketing tools for PT practices. One person on his team developed this, and she has no coding skill sets whatsoever.
Wow.
And this is the part that is rapidly taking
Yeah.
place. And
Wow.
I've said, another thing that we've seen in our practice. I'm sure a lot of your audience, they may use Google search, maybe some Google search AdWords or this or that. Do you realize Google's probably going to have zero revenue from paid search within 24 months?
Oh, wow. Yeah.
I mean, paid search is dead.
Yeah.
And but nobody's going to use Google. Why would I want to do a search for a promoted response versus an organic response?
Organic response. We just had this conversation in our EO group actually, which was, one of our members said, I want to show up on AI response
That's
as
right.
the guy, right? And it was
And
interesting. We,
if you've not done a search on your business through ChatGPT, Grok, or Perplexity, if you don't show up, here's the next step. You ask AI, "Oh, I'm not showing up. What do I need to do to show up?" And it will
yes,
tell you.
and it'll tell you exactly. And that's exactly what we said. Well, let's ask it. And then, so we have another member in the group that's actually an AI expert,
Yeah.
and he can do
Whatever that is these days.
whatever that is now, right?
Yeah,
But he could
yeah,
do some profound things.
yeah.
And it was just this revelation of, business is always constantly changing. And you've been in the game for a really long time. Like you said, you were already in the marketplace working as a professional when computers became a thing, right? What Tell me where, like, you joined EO, I think you said 2001. So by this
Yeah.
time you're using computers like
Oh,
every
yeah, yeah,
day, right?
right.
And QuickBooks is now like a very popular app that most businesses are
Right.
probably using. But you have to shift at some point, and you have to decide, you're going to make these changes like you just said. So I'm going to look at the data, I'm going to change my service model, I'm going to test it, of course, because that's good scientific process, right? I don't want to totally change it without knowing what the response will be. Now you get good response, but then you have to shift into leadership now, because now you're a new voice in this echo chamber of everything Greg is saying is bad and everything the old regime is saying is good. And there's a tension there. And I know that because I experienced it as a lawyer, right?
Yeah, I don't talk to accountants. So.
Yeah, I tell people all the time, I'm like, I know a few lawyers that I would call friends, and the rest of them, maybe they're frenemies. I'm not sure. But the old way of thinking, the this is how we've always done it, right? To shift that, especially in an industry like accounting, right, which is powerful, very powerful.
I should have my head examined, but I didn't.
Yeah, well, that's what they were telling you, I'm sure, right?
Oh yeah,
and maybe even now, like, you're not the big four, right? Like there's like you said, just about the elasticity of pricing and where you want to be, right? So you're not the big four, maybe, that we would consider like the Nordstrom types in your industry. Right. But you are a leader, and you have a following now, and now you have a platform. What inspired you to really create this platform and keep going despite what was said?
It goes back to, in that first iteration of touching a first generation PC, I replaced my predecessor, who was the controller of the bank. He was a banker, he wasn't an accountant. He reliably delivered bad data the day of the board meeting, that was constantly wrong, excuses, whatever. Good guy, but he just didn't have a skill set. And so I closed the books. Once I got a hold of the computer and learned spreadsheets, I was able to close the books by noon of the first day of the month and produce a very robust board package by noon of the first day of the month.
Wow.
And so it taught me, I basically learned modeling and created my own process to predict the future. So I'm looking back at the past, and then I'm forecasting. And so because I was the only person we were a bank unit, we'd been bought by a unit that had banks in Alabama. And so I was the only one that knew how to use spreadsheet at that time. And so I basically ran the budget models for all of the banks in the state, because I was the only one that knew how to use a computer. So what a portable computer was, remember the old big CPU box with a monitor that sat on top? Literally, I would walk out at night, pick up my computer, unplug it, and walk out with the monitor on top to get to my car. So it was before we had really any viable portable computers at that point. And I'd go around the state, running these models, for all of the ones in the state. But it came down to, think of it like this. There's a concept they talk about why Wayne Gretzky is the greatest hockey player of all time. And most people, few will argue, but not many. Gretzky knew to skate to where the puck was going to be, not where it is. So that's been the common theme of why they talk about they call him the Great One, is his nickname. And so I really kind of developed this idea. I wanted to look at where are we going, not yes, you got to study where you've been, but you got to spend more time on where you're going rather than where you've been. And early on developing these models. Once I developed the models, that was really kind of drew me into more the consulting side of the business, and really vestiges. The current model we use today for clients has its origins in that 1983 first model I ran for the bank that looked at balance sheet, P&L, and cash flow, and rate and volume variances, and you could run multiple scenarios. It's like, well, if we change this, what does this look like? If we change this, what does this look like? And then once you can, I had a former partner one time that famously said, it's funny, we always make money on the spreadsheet. And you still have to execute, once you come up with that plan.
I'm not the only one then, I guess.
That's right. Yeah. So really it was a series of incrementals, but really EO to me was the inflection point in 2001, because I joined the Atlanta chapter and I mean, Huntsville's 4-hour drive from Atlanta. So
Yeah.
I'm driving 4 hours to every month to forum meeting, 4 hours in forum meeting, a 4-hour drive home. And to a person that lives in an hourly profession, I mean, that's just like death.
Death,
It was
right?
like,
You're calculating. You're like, this is costing me so much.
it was just so incredibly valuable. But then, because at the time I was very one of the very few accountants in the whole organization, I I got asked to serve on the Atlanta board, and then went to my first the Global Leadership Conference, and we were talking to one of the board members, and they found out I was an accountant who actually could talk about numbers, and there wasn't an accountant on the board, and so I actually was first. I was a member of the first standing finance committee that EO had in 2005, and then 2006 I got asked to be on the board. So I was the first sitting board member to be the chair of the standing finance committee, which they needed because when I joined the board, we'd had 2 years of losses and had no reserves.
Never.
Zero reserves. I mean, literally because we billed for dues a year in advance before the year started.
Right.
That was the only reason why EO had cash. And so the reserve process that exists, the reserve process and the profit target that they use today was what I implemented back in 2006.
I love it because I'm on the board for the EOA group here in Atlanta.
And when I was on the board is when we started Accelerator. So that's one reason why I've always been an accelerator.
I love it. It's so good.
I go back to the very beginning of it. So it's
and EO practices what it preaches, right? So we have this board summit, right? Just like we do in our firm, we have this annual planning. We say, okay, what are we going to do this year? What's that going to cost? And then we try to hit those targets. And if we don't,
you got to do it.
I'm the one paying the price for that.
That's right. And none of us are perfect at flawless execution. The separation of the really great businesses to the ones that are ordinary and the ones that fail is, yes, all of us can come up with great ideas, but it is relentless execution is really what separates the great ones.
Absolutely. It's execution. We run on EOS too. So we're doing these L10s. I mean, the same that we're doing at EO. And those are the kind of value adds that we try to also integrate into our legal services where we're saying, hey, like, when are you having your meetings? Do you want us to be a part of your meetings at a quarterly cadence or a monthly cadence? So when you start integrating into these businesses, do you ever see, like, as you look back, is there really a closing thought that you might leave with an entrepreneur who's similar to you? Maybe they're really visionary, right? Really visionary, but they also are grounded in data. They understand that they have to execute and they have to execute on the right information. What's a closing thought or tip that you might leave for someone? And we would say that's building a legacy business that wants to grow, but grow smartly.
We have the simple numbers business strategy is three building blocks. Number one, figure out what the market needs. Simple as that. Does the market need this? And need is sometimes necessary. Need is sometimes discretionary. But what is my total addressable market? But I've got to solve a need of the market. That's what my forum told me that led to what we created. We were solving a need of the market. Number two, can I be profitable delivering that need? If I can't be profitable delivering that need's a want to, not a have to. Once I get number one, number two done, then I tell everybody about it. Then it's marketing, brand awareness, execution, and all those things. Now, once I've solved those three, I know I'm secure in my place in the marketplace. Then I go back to the financial framework. And the financial framework is this. Number one is I got to set my profit target. In the professional services world, your goal is probably going to be what I would call 15% to gross margin. Now, in most legal firms, gross margin and revenue are the same number, but you can have outsourced. I mean, you can now outsource people to do document discovery and those kind of things. So you take out any pass-through costs like that. and get to what's the pure revenue that comes to my firm and what I do. So I need a minimum 15, but really the best firms are going to be at 20. So 20, we would say 20% profit to gross margin is your target, what you're aiming for. And that means that to get to that 20%, I'm paying a market wage to everybody who works in the firm for what they produce that is not inclusive of a share of profit sharing or any of those kind of things. So that's a foundational pillar. The second one, I got to have 2 months of cash. So that's my second pillar. The third one is to get to the 20% profit, what's my total labor efficiency ratio? So of all labor, I don't care if it's billable or admin, paralegal, floor sweeper, you name it. Gross margin divided by all labor needs to be at 2. It is no more complex than that. I don't care what you spend on other operating expenses. Now you can have opulent offices and those things and spend the gods of money on marketing. If you're one of the crazy high spend marketing guys, I mean, you might have to push that LER number up. But 95% of all legal firms need to hit one profitability metric to hit their profit target. I need $2 of gross margin for every dollar of all labor, whether it's billable or not, spent. If I get those three, the fourth number that's going to produce is I'm going to be at probably 75% return on invested capital. Of the invested capital that I take to have equity in the practice, if I have $1 million of equity in the practice, my profit target is going to be $750,000.
Mm-hmm.
I mean, so would you like a 75% CD?
Right.
That's it. But I guarantee you, if you back into the math to be at that 750 of profit on a practice that takes $1 million of equity, then I'm going to be at a 2 total LER. This is the thing of studying the data. This is what just jumped off the page, is this concept that to hit those profit targets, it's all about it. I almost never have to worry about the overhead expenses, the non-labor expenses. And when we talk about labor, keep in mind, we're not loading it with payroll taxes. We're not loading it with benefits. Those are part of operating expenses. They take care of themselves.
Mm-hmm.
Keep it simple. It's wages.
Yes.
And if you're a partnership, it's your draw that's not your share of profit sharing. It's your draw that's really your guaranteed payment that's part of your salary.
Right.
LLC. But that's really compensation. And so you calculate those in there. But if you hit those are our 4 cornerstones of the business. And then once you know those cornerstones, it gives you clarity of what sectors of your practice are working that add to that value, which ones are sucking that value out. And also, because I can measure it by person, which people are adding to that value and which people are a sucking sound. And
yes.
I got to either fix or eliminate those sucking sounds.
Yes, absolutely. Because it's a survival issue. A lot of us, and I'll speak, really for myself here, but probably a lot of the folks that are listening to this podcast, having the tough conversations around the accountabilities is really a big challenge, because once you start to understand the math and what the math is telling you and what it should be saying, right? Now you have to change behavior. But it's your behavior first before you can ever look out to the other people that, maybe are not living up to what that standard should be.
Yeah.
Do you have any parting remarks on that? Is there a mindset shift that has to happen when you decide?
I think you gotta suck it up and have some hard conversations. There's several really good books. There's a book called Difficult Conversations. Mm-hmm. It's not what you want to do, it's what you have to do.
Yeah.
But I think one of the things that our work is steeped in is behavioral economics. So a lot of what we're really trying to do is give you data that spurs you to action. Traditional accounting data does not spur you to action. It leaves questions and doubts. The way we present the data, there is no doubt. It's like, this has to be fixed. What are you going to do?
Right. Yes.
And here's the other thing. I can tell you where you've been. I can tell you where you're at. And based on this current trend, I can tell you where you're going.
Right.
And where you're going is riding a pig off a cliff.
Yeah.
And that's no fun for you or the pig.
Absolutely.
So.
I love that. No fun for you or the pig. Absolutely. And the pig has babies, right? There's other stakeholders that are
right.
attached to that pig.
Yeah, but there again, as you mentioned, pick whatever flavor. We try to be, coach agnostic. We work with all of them. All the systems work really well. It's about using them and being faithful to them. But your systems of your operating system puts those decisions timely in front of you, so you have the data, and then you have the clarification of the action item that somebody's got to take hold of and go do something about it.
Absolutely.
Yeah.
Well, this has
hope,
been
hope is not a strategy.
So. Hope is not a strategy, and we all hope for the same things in life, but we don't all achieve them. And I think that's so important, because you have to have the action to back it up to be able to get there. Yeah. And it starts in the mirror, right? Like, we all have to start somewhere. So, I'm grateful that
one thing that I do want to come back and make sure that we clarify, because you said this earlier about the tradition of the 3 multiplier.
Yes.
Here's the reason why. Mine's a 2, because my 2 accounts for when you're not productive. The 3 is just for the billable moment, and really it's 3 to 4.
3 to 4, right?
Yeah, because realistically, for my super expensive people, I probably can't get more than a 3, but my less expensive people, I can get a 4, maybe a 5 multiplier, right, if I am billing on a time and materials basis. Yep. But the idea is like, that's not really the key. The key is what's the value of what we're doing, and what's the least labor cost it takes to get that done. And so LER is a much cleaner measure for services businesses like ours, because I'm taking into total account, utilization can be a flaw. Well, I'm fully billable.
Right.
Yeah, I put the hours down, but did they get through to the client, or did it get adjusted in the final bill?
Exactly.
And then I look at realization. Well, LER is taking utilization and realization and mushing them together and saying, listen, this is just the raw economics.
The brass tacks.
I brought this revenue in that we got paid for, and this is what the firm paid me to do it. Did I get the right lever? And that lever, now I got some people that might be a 2.5, maybe a 3. You're probably not going to get much above a 3. But I got some people that are 1.5 because they're support positions, or they're a business developer. And so but the cool thing in time tracking businesses like legal and accounting, I can actually measure labor efficiency by person. And when you start stack ranking LER by person, you have to have a real hard decision moment of either this has to improve or something's got to change.
It's true. Yeah. I think it's fascinating too, because I love how you kind of take those non-billable personnel and you add that labor in, and it's so much more simple, because previously it's like, well, that's part of SG&A, so you're going to take this labor out, or this person does some admin and some billable, so now you got to split their costs and you got to move this over here, and I'm over here like doing gymnastics.
You don't need to move anything.
Yeah. And so this is the most simple, and I think simple is elegant. Simple allows us to take action, whereas, and especially in our fields, wow, is there such a focus on data, information, more data, more complexity? How can we make this, even more extravagant? And it's like, no, how can we actually simplify this and make it more elegant to where it actually works? I always joke, there's the business that the lawyers think should be happening, and then there's the business that actually does happen. And those two things are just miles apart. And I think that's exactly true in accounting as well. And so I love this conversation. I also want to shout out to the accountants out there. There are others just like yourself that do things in a more modern way. There are other attorneys just like me that run their practices in a more efficient and modern way. And I think that having these conversations just allows, maybe it just gives permission to others in other industries as well. Software, I think, is a big need for how to change their pricing models and efficiencies.
It's the next 5 years is not going to be like the last five.
Sure not. It's going to be a crazy experience. So I want to thank you again for taking time today. We know that you're busy. You do a lot out there. If you are interested in connecting with Greg, we're going to put his contact information in the show notes. But if you want to say anything as we go, Greg, just to the audience, take the floor.
Yeah, I mean, probably the best contact for me is my speaker website, gregcrabtree.net. It's probably the easiest way, because that way the books are listed there. So those will link you over to Amazon, if you're interested in either one of the books. We've also got, a lot of articles and things, extra content, that we've written, videos and those things. And then also a contact page. If you want to work with the firm, we can help. Our process is really bringing a firm together, and helping them establish these principles and get everybody on the same page, and then really creating enterprise value rather than just as I said, professionals sharing overhead.
Yeah, I love it.
It's always great to see when that happens. Yeah.
Well, and we might have you back again too, because legal is potentially going to be opened up to private equity here soon. There's a lot of change.
It will. There's no doubt it will. Yeah.
So I'm excited for that. And I think that if you're a lawyer, especially listening to this, don't be afraid. This is actually great for us. It allows a lot more democratization of legal services for access to justice, which is a big problem.
It does.
So this is exciting, Greg, and maybe we'll be back again in the future. But please check out Greg's website and learn more about him. I know that you will walk away not only just more empowered, but also just connected to another person who, like you, is interested in building a legacy business, because that's why you're here at this podcast. So I'm going to say bye for now, and hopefully we'll see you on the next episode.
Thank you for listening to the show. Remember, stay sharp, stay curious, and stay tuned for our next episode. Bye for now.